All right, let's talk Archer Aviation. We're digging into their Q3 2025 earnings call, and wow, what a quarter. They made some huge strategic moves, but, and this is the interesting part, it triggered a pretty sharp drop in the stock. So what's going on here?
Yeah, that's right. A nearly 8% drop the very next day. So you've got management painting this incredibly ambitious grand vision for the future, and then this happens. It begs the question, right? Why the disconnect? Let's get into it.
So here's how we're going to break it down. We'll look at the numbers versus what Wall Street expected, then get into that big vision from management. After that, we'll tackle the market's reality check, and finally, we'll give you our take on what comes next.
All right, Section 1, let's start with the basics. How did their numbers actually compare to what the street was looking for?
Okay, so looking at the numbers, it's kind of a mixed bag, right? On one hand, they beat on earnings per share. Their loss was smaller than expected, which is a good thing. But then you look at revenue, and it's a technical miss. Now, you got to remember, they're a pre-revenue company, so we're talking about a tiny forecast to begin with. And their adjusted EBITDA landed right where they said it would. So, all in all, not a disaster, but not a clean sweep either. But honestly, the numbers weren't the real story this quarter. Not at all. The call was completely dominated by this huge bullish vision from management. They're not just building planes anymore. They're trying to build an entire ecosystem.
I mean, just listen to the CEO, Adam Goldstein. He said, "The era of advanced aviation has arrived. We are not waiting for the future, we are building it." That's a bold statement. The message here is crystal clear. Forget just being an aircraft maker. They're going for the whole shebang, a full-stack, vertically integrated platform for urban air travel.
And this wasn't just talk. They backed it up with 3 massive moves. Pillar 1, secure the cash. They raised a staggering $650 million, giving them a war chest of over $2 billion. Pillar 2, own the real estate. They bought an entire airport in LA, Hawthorne Airport, for $126 million in cash. You know, just in time for the 2028 Olympics. And Pillar 3, control the tech. They snapped up about 300 patents, massively expanding their IP portfolio. They're building a fortress.
And this big strategic vision isn't happening in a vacuum. They're making real, tangible progress on the ground, or I guess in the air. Their Midnight aircraft is hitting its flight test goals. We're talking range and speed. They've also locked down huge partnerships with giants like Korean Air and Japan Airlines, which is key for that Asian market. Plus, a little bit of cash is starting to trickle in from their partner in the UAE. It all points toward their goal of getting this thing commercial by 2026.
Okay, so you've got this huge vision, a massive war chest, and real operational progress. You'd think the stock would soar, right? Well, not exactly. Let's get into the market's reality check, because investors hit the sell button, and they hit it hard. And this right here is the heart of the issue. It's a tale of 2 perspectives. Management is up there talking about vision, strategy, and their $2 billion bank account. But what was the market focused on? The other side of the coin. That $650 million? That's shareholder dilution. The $2 billion in cash? Well, they're burning through about $126 million of it every single quarter. And all that operational progress? It's great, but meaningful revenue is still years away. 2026 at the earliest. That's a long time to wait.
And you can literally see the market's reaction in the trading volume. Look at this spike. Volume more than doubled, jumping from 70 million shares to over 150 million. This wasn't just a few people selling. This was a massive, decisive shift in sentiment. The market saw the news and said, nope, we're out.
And it wasn't just the dilution and cash burn. There were other headwinds piling on. For starters, the stock was already weak, down about 35% in the month leading up to this. Then you have the new airport, which sounds great, but it also means massive future spending commitments. And then, like a cherry on top, their biggest competitor, Joby Aviation, hits them with a trade secrets lawsuit right after the call. Just one thing after another.
So that brings us to the big question. You've got this incredible, ambitious vision on one side and some very real, very near-term risks on the other. How do you weigh all that? Let's get to our take on Archer's path forward.
So where does Archer go from here? That's really the $1 million, or I guess $1 billion question, isn't it? Is this a brilliant long-term strategic play, or did they just create a huge near-term headache for themselves and their shareholders?
All right, so if you're watching this stock, here's what you need to keep your eyes on next quarter. First, that cash burn rate. Is it staying in line with their guidance? Second, any real concrete progress on certification with the FAA and in the UAE. We need to see those milestones getting checked off. Then you've got the new airport. We need more details on the integration and the spending plans there. And of course,
Any news on that Joby lawsuit or potential new partnerships, especially on the defense side?
So our official call on Archer is market perform. Here's the thinking. They've made some incredibly bold moves that absolutely secure their long-term vision. They've de-risked the future in a big way. But that comes at a cost. In the short term, you've got this massive overhang from the dilution in the execution risk. We think the market has fully priced that in now, which means the stock is probably going to be stuck in a range for a while. It's likely to trade sideways until we see one of those huge, concrete catalysts, like getting that FAA certification that proves this ambitious strategy is actually paying off.
And a quick reminder, this is not financial advice.